One of the things I've always found frustrating about the traditional schooling system is how little emphasis is placed on practical life skills like financial literacy. Don't get me wrong, I think the schooling system is great for academics, but I often find myself wishing I had learned about certain things a little earlier in my life. One of which is the importance of the credit system. Good credit is absolutely critical to your financial well-being. In fact, it might just be one of the most important things that you can focus on. A bad credit score can have a significant impact on so many areas of your life. For instance, it can limit your ability to secure a mortgage, get approval for a rental application, or even get a decent credit card. In some cases, potential employers might also review your credit score when evaluating you for a job. It can also have a direct impact on the interest rate that you can secure on a loan, which potentially can cost you thousands of dollars. So it's not an exaggeration to say that your credit score can make or break your financial future. That's why it's so important to take steps to boost and maintain your credit score. And because your credit score isn't always discussed or talked about as much as it should be, it's easy to understand why so many people feel confused about how it works. So in this video, we're going to change that. I'll cover how it all works and talk about ways you can boost your credit score. Before we get into it though, I would really love it if you would hit the like button on this video and make sure that you're subscribed to the channel. So what is a credit score? Think of your credit score as a report card for how good you are at paying back borrowed money. Lenders use it to decide if you're trustworthy enough to lend money to and at what interest rate. So the higher your score is, the better off you are. It matters whenever you're applying for an auto loan, a mortgage, a credit card, or even when you're trying to rent an apartment. Your credit score controls your fate and will showcase your trustworthiness, or dare I say, creditworthiness to a lender. In the US, credit scores typically range from 300 to 850. In Canada, credit scores range from 300 to 900. Credit scores aren't only unique to North America though, they're used all over the world, and for the most part, they work either the same way or very similarly. So how does it all work? Your credit score is influenced by several factors. One would be payment history, and this is the most important factor. It's basically a rundown on whether you pay your bills on time or not, or if you've ever missed a payment before. Two is debt burden, and it's all about how much money you owe and how much of your available credit you're using. For example, if you have a credit card with a limit of $10,000 and you've charged $5,000 on it, then your credit utilization rate is 50%. Keeping your credit utilization rate low is important for a good credit score. The third factor is a length of credit history, which assesses how long you've been using credit. The longer you've had credit cards open, the better it is for your credit score. So if you've been using credit responsibly for a longer period of time, your credit score is likely to be higher. The fourth factor is types of credit, which refers to the different types of credit accounts you have. This could be credit cards, loans, mortgages, and others. It's good to have a mix of different types of credit as it shows that you can handle various types of debts responsibly. The last factor is recent searches, which looks at how often you apply for credit. Just remember that too much credit inquiries within a short period can hurt your credit score. Knowing your credit score is an important step in managing your finances and improving your credit worthiness. Fortunately, there are free resources available in both the US and Canada, making it easy to access this important information. If you're in the US, there are several ways to check your credit score for free. You can sign up for a free account on websites like Credit Karma, Credit Sesame, or even annualcreditreport.com. These sites will provide you with your credit score and a detailed report of your credit history. In Canada, most major banks like RBC, BMO, Scotiabank, and CIBC offer free access to your credit score. If your bank isn't mentioned here, you can still use websites like Credit Karma to check your credit score for free. And once you review your credit report, you'll be able to identify the areas that need improvement to increase your credit score. After checking your credit score, you'll know where you stand and how important it is to improve it. A score below 650 in the US or 580 in Canada will require urgent action to reach 800 or higher. Here are some ways to do it. Asking for a credit limit increase on your credit card. Generally, this won't hurt your credit score, but the credit score issuer may do a hard inquiry on your credit report, which could cause a temporary drop in your score. But if you're already approved for the increase and use the additional credit responsibly, it could actually help improve your score over time by reducing your credit utilization ratio. Let's say you have a credit card with a $10,000 credit limit and your current balance is $2,000. your credit utilization ratio would be calculated by dividing your balance by the credit card limit, which in this case is 0.2 or 20%. If you were to increase your credit limit to $15,000 and maintain the same balance of $2,000, your credit utilization ratio would decrease to 0.133 or 13.3%. This lower ratio will positively impact your credit score. Just make sure to use the increased credit wisely and avoid overspending or carrying a high balance. Another way to boost your credit score is by becoming an authorized user on a credit card account of someone who has good credit. This is called credit piggy banking. By being added as an authorized user, the account and its credit limit will be reflected on your credit report, which can help improve your credit utilization ratio. You don't necessarily have to use the credit card or have access to the account number in order to benefit from the account holder's positive payment history. However, it's important to make sure that the account holder is responsible with their credit card and has a good payment history, as any missed payments or high balances could negatively impact your credit. You can also limit new credit applications, since each application for a new credit card generates a hard inquiry on your credit report, which can temporarily lower your credit score. If you apply for too many lines of credit within a short period of time, it can raise red flags with lenders and suggest you're a riskier borrower. So, only apply for credit when you need it and try to space out your applications to avoid multiple hard inquiries in a short period of time. By doing this, you can maintain a healthy credit score and avoid any negative impact on your credit report. One of the most important factors in maintaining a good credit score is making your payments on time. When you make a late payment, it can negatively impact your credit score and stay on your credit report for up to 7 years. Therefore, it's crucial to prioritize paying your bills on time, even if it means setting reminders or setting up automatic payments. Late payments can also result in late fees, penalties, and interest charges, which can further impact your financial health. By consistently paying your bills on time, you'll not only avoid these extra costs, but also build a positive payment history, which will help increase your credit score over time. Finally, keep the old credit accounts open. Closing an old credit account can shorten your credit history and lower your credit score. This is because the length of your credit history is a factor that affects your credit score. When you close an old credit account, you lose the credit history associated with that account, which can lower your score. Keeping the account open, even if you're not using it, can help you maintain a longer credit history and improve your credit score. In conclusion, these are some practical steps you can take towards improving your credit score. It's a critical aspect that affects your borrowing and leveraging capabilities, so I strongly urge you to familiarize yourself with these steps and take them to heart. Feel free to even save this video and refer to it later on. I've personally taken all of these steps and they've all helped improve my credit score. I wanted to share this video with you so that you too can improve your own credit score. I hope you guys found this video informative and helpful. Let me know your thoughts in the comments, and as always, thank you so much for following along. If you haven't already, I would love it if you would subscribe to the channel and hit the like button below. I'll see you in the next one.